hello everyone. Today is April 28th, 2023. We just closed the last day of trading on the market, and I'm here with I'm Laban Johnson, and I'm here with Chris Perkins, President CEO of Abundance Asset Management. Welcome, Chris.
Hello, Laban. Good to see you again.
Good to see you again. And so we are closing up the end of our second month of trading. How's it been going on the market for us this month?
Well, April was a great month for us, Laban. The strategy that we use actually performs incredibly well in markets that see the kind of volatility that we've seen in April. There's a volatility measuring stick, if you will. It's called the VIX. The ticker is VIX, and it's gone down over the period of April. It had a little spike just before earnings there. And so we sell that volatility, right? So when we're selling stock options, the volatility is actually a good thing for us.
Awesome. So how's the strategy hedging from the downside of things that are happening in the market and with the volatility that you were just mentioning?
Yeah, we actually own very little stock. So the volatility is really great for us to sell. We only have about 25% of our assets actually in the stock, and we're selling puts. So when we sell puts, we're just obligating ourselves to buy as the stock goes down, and the stock just hasn't gone down enough for us to actually end up with any shares. We have about 25% allocated to the shares. So it did drop a bit near the beginning of the month. And then after the earnings announcement earlier this week, Wednesday and Thursday, Megatech was announcing earnings. So after many of the major tech companies announced earnings beats and revenue beats, then the stock has taken off since then.
Right. It was the QQQ is pretty tech heavy, from what I understand. I think the number was around 60% tech right now.
50%, yeah, it's 50% in
so
tech.
50% tech.
Yeah.
Now, how does this, because we trade the QQQ, how does that answer the investor's need for diversification?
So we want to be one asset class for an investor, right? We're not saying that you should have all your eggs with us, but the QQQ is actually vastly diversified, like more than people really think for the most part. So there's 100 of the largest non-financial companies in the QQQ, ranging everything from Costco. So you got grocery on one end, you've got pharmaceuticals, and then of course you got Megatech, Microsoft, Apple, Amazon. But I think it's important also to look a little bit deeper. I'll use Amazon just as an example for the first bit, right? Is like Amazon also owns Whole Foods. So you got grocery within Amazon as well. You've got logistics in Amazon, right? Shipping, right? People don't even think about it. They just think Amazon stores, right? You've got AWS, like web server, right? They've got their own cloud storage. They've got all sorts of cloud systems out there. And then, as well with Google, that goes quite deep as well. And Microsoft has recently become a bank. Apple has recently become a bank.
Right.
So Apple's now offering 4.15% on deposits, and there's no restriction. You can put your money in there, take it out whenever you want. There's no lock-in period or anything, right?
Wow.
So all of these companies, even within the single company, these companies are diversified. And so we have 100 of these companies and range from everything from communications to pharmaceuticals to mining to, Megatech.
Should we start benchmarking against Apple now?
Yeah, I don't know. That's a risk-free return, essentially, right?
Right.
Yeah, so that's how you kind of calculate a risk-adjusted return, right? Is like, what is the risk-free rate? And depositing your money with Apple, I would say, is a very risk-averse rate of return. So 4.15% is what they're paying. And, we're taking on a little bit more risk because we're exposed to the volatility of emotions, right, that happen in the stock market.
Right. But our returns we anticipate a little higher than 4.5% per year.
Yeah, we do. I'd be happy to benchmark our returns against 4.15% actually. So for the month of April, we are up 1.33% as our trading result. Just a little disclaimer that is unaudited, right? I'm just going off of the computer screen and the brokerage account. What we started with opening April 3rd, because that was the first day of trading in April. In that period of time, the QQQ is up 0.67% compared to our 1.33%. And the S&P 500 is a close second, close to us. It's at 1.21% increase. Yeah.
Interesting. Very, very, very interesting.
Yeah.
So looking back, since it's the end of the month, what would you do different if you could redo this month? What would you do differently?
I love that question, Laban. It's almost like crystal ball like question, right? So it's like if you look in the rear view mirror, how could you have driven the road differently? Essentially, right? And so it's always easy to look at a chart and look at past pricing history, and it's like, oh, if I would have got in here and got out here, obviously your returns would be far more spectacular. But part of our risk management is that we don't try to predict what the stock might do. We stay 100% confident in our strategy. We execute trades when the numbers make sense, and we do nothing quite a bit. And that's actually the hardest thing for most traders to do, is just nothing at all.
So we might market that. We do nothing.
Yeah. No, we do something, but we only do things that make sense.
When everybody's panicking and fear selling, fear trading, we do nothing.
Yeah, we do. Well, or we'll take profit on options trades, right? Like if there's option profit there, we'll take it.
Right.
But if there isn't, just leave it alone and just wait for the outcome to happen.
What are you looking forward to going forward, going into May 2023?
Going into May, just staying the course and keep gathering the track record, right? Talked to lots of investors, and they're like, "Yeah, we like what you're doing, and we just want to see more of a track record." I mean, it's only been 2 months, real money trading now. The important thing is that everything is following our models exactly as our models had predicted, and so the models are from simulated trading, real time, but simulated trading. And, we kind of benchmarked ourselves and created the models based on our net asset value movement in those accounts versus the QQQ. So the biggest thing here is that it's a very measurable key performance indicator, meaning you can see what the price would have been of the QQQ had you bought shares, and then you can see what our performance is for you relative to those QQQ shares. And the month of March was a big outlier month. The QQQ was up drastically in March, along with the S&P 500 and nearly everything else across the board, right? So on those months, we will not outperform. It's not designed to outperform in those months. I call those outlier months, right? Where it's like that doesn't tend to continue. And I kind of said that on our March video, right? Is like these months that happen, they don't tend to repeat themselves the following month or continue to repeat themselves 12 times over to make the full year. And it's proven me right in that way. I mean, I don't try to predict it, but you kind of go with historical values and historical price action in times like this. And when it does something crazy like that and skyrockets up, it doesn't tend to do that again the following month, and it didn't in April. So it proved me right.
Proof is in the pudding, as they say, right?
Yeah, exactly.
Well, awesome. Well, Chris, I think we're going to wrap it up. And thank you so much for joining me. We look forward to the month ahead, and folks, we will continue to keep you updated as we go. We're building that track record that everyone's waiting for. So it's happening. Meanwhile, if you have any questions, don't hesitate to get in touch. We're at abundanceassetmanagement.com. We're also on Facebook. We're on LinkedIn. We're everywhere we want to be, right?
Yeah, and YouTube.
Everywhere you want to be, everywhere we want to be, right?
Yeah.
Except we don't have a TikTok, but
yeah,
maybe soon.
Yeah, exactly. It can only do so much, right?
Yeah, right. When we're doing nothing, maybe we can start TikToking.
There you go.
Awesome. Thanks, Chris.
Okay, thanks a lot, Laban. Yep. Bye.